ringside at Yankee Stadium where the
Joe tried with the left and right, the head both punches, misses, Jack drops it down, and he arches across the ring. He lands a terrific left reverse with body against the hook and takes a terrific right and a knockdown. Josh is now 2-3.
Good morning, everybody. Welcome to the opening range. My name is Jim Cagnina with NinjaTrader. Today is Tuesday, May 31st, the day after Memorial Day. Hopefully everybody was able to chill yesterday, relax, enjoy family, friends, neighbors, relaxation. That would be awesome. Hope that's true. Thanks for being here today. We have an awful lot of stuff to talk about. Tom's going to be joining us in a second also. Before we go any further, though, let me remind everybody, trading futures, options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that can be an equation for opportunity, which I think is why we're all here, it's also an equation for risk. So be careful, only fund your future trading account with risk capital. My personal definition, money I can afford to lose doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly stress me out. Stress in life is really important. We make bad decisions when we're under stress. So be good, easy on the day trade margins. You have plenty of leverage as it is with the futures. That could help with stress level also, by the way. So keep that in mind. Also, trading on a real-time simulated live NinjaTrader trading account today. None of this should be construed as trade or investment advice. And feel free to type in questions, comments, thoughts, feelings, anything into the chat that could be helpful to not only me and Tom, but also to everybody that is participating. Greatly appreciate you guys being here today. So, good morning, Tom. How are you?
Hey, good morning, Jim. I'm doing well. Had a great weekend with the family. It was great weather. Got outside and saw a little baseball and just basically relaxed with kids and the family. How you doing?
Good. Got to hang out with Mom and Dad Kegs this weekend in Charlotte. Thank you for hosting in your wonderful new house. We had a great time. Made it home safe. An easy peasy car ride back. So that was it. It was nice. We're here. We're back. We're ready to work. First to chime in is Bob Lewis. Bob, thanks for being here. You get a special shout out today. For being here. And before we talk about economic releases, I just wanted to look at this S&P weekly chart. Tom, I put a weekly chart up here to give me perspective this morning because I was looking at the daily chart, scratching my head, a little bit nervous. But then when I looked at the weekly chart, it made me feel a little better for some reason. You know, I have my fib line drawn pretty much from early year, beginning of the year, where we had our highs here at 4,800 about in the S&P, down till not last week's, but the week before's low, which was kind of ugly. And we see that really huge candle from last week where it was pretty much a move in the opposite direction. And now we're kind of just floating around. I'm not sure what you're making of this, but I just thought I'd mention it.
Well, I think it's great when you can't find direction in the daily chart. It's good to step back up a level and look at the weekly just to see if there are bigger dynamics in play. And what I think I see right here is where we're trading now, where we've traded down to just early in the week, right? We see that support level back in, looks like 2021, about a year ago. We saw a lot of support all the way to the left of the chart. We're trading back down to that support level. And you're right, with the Fibonacci retracement, we've hit up to the 38% level and come off of that. So, interesting to know where those levels are on a bigger level. Actually, if you go up to April and May, right there. Yeah, exactly. That dotted line, right? A lot of support there before the market continued on its uptrend. Here we've got that as a level that could be support again. So, it's interesting to see what the guidance is on a longer term basis. And I think this is a great chart.
Yeah, no, for sure. I'm open-minded going into today. Anything could happen, even though we're down about 18. We were down 36 earlier this morning, maybe even more. When I went down to get a cup of coffee, came back up. It was kind of moving. But there's some news and some reasons why we're going to talk about it in a second. Let's take a look at the economic releases that we have today so far. We have Case-Shiller Home Price Index. It's out already. I was setting up my charts and stuff. I don't know exactly what it was. FHFA House Pricing Index. Again, that was 9 o'clock. Again, we'll take a look at a 10-minute chart in a second and see if it moved the needle at all at 9 o'clock. 9:45, we have Chicago PMI, Purchasing Managers Index. Consumer confidence at 10 o'clock by the Conference Board, not to be confused with consumer sentiment, which is a University of Michigan thing. They're a little bit different in their calculations and the ideas behind those numbers, but that's at 10 o'clock. It's a big deal. And then at 10:30, we have the Dallas Fed manufacturing survey, which could be interesting as well. My last notice is certainly congratulations to Real Madrid. That 60-minute goal at the end was certainly exciting. And that goalkeeper, I'm going to say his name wrong, Tom. I'm going to say it's Cordoias. I don't know. He's a Belgian dude. Pretty darn impressive, his play. I'm sorry. I know I'm off the beaten track. I'm moving from baseball to the Championship League over in Europe.
Yeah, I'm not as familiar with that, although certainly I know a lot of people were looking at that.
Yeah, you have to hunt and peck to find it on TV, but I did. In any event, so here's now I'm drilling to the daily chart, Tom, and we'll start with the E-mini S&P. We do have some earnings today: Salesforce, Victoria's Secret, HP, Ambarella. I'm not familiar with Ambarella, but they're coming out today. In any event, so I have an inside fib here, and then I have an outside fib here. And the outside fib, again, it takes into account a longer term point of view than the inside fib, but let's just track it. We had a really big rally last week. Today, things are kind of tracking down a little bit, down about 20 on the S&P, right at that inside fib, testing that inside fib 61.8. And this rectangle that I drew here, a lot of times, Tom, in my mind, area of support becomes area of resistance and vice versa. So I leave that rectangle in and see if that's the case here. See if that little area there is just kind of like a dead zone, like you're either trading above it or trading below it.
Right. And I think we saw at the end of the week, Friday, we saw that at the end of the day, market just found a new level, right? So there wasn't a lot of trading in that rectangular zone. It was all towards the top of that candle towards the end of the day. And we may see that, we won't return there. We do see support at the 61% inside fib and the 38% retracement on the longer fib, the longer term. So we might just see some support there if this market continues its recent uptrend.
Right. I hear you. I agree with you on that as well. We got the MACD is on the move on the way up. We have volume down, though, a little bit. Although, interestingly enough, I noticed, when I logged in last night at about 7 o'clock East Coast time. I know I should do something else on Memorial Day weekend. But when I logged in, it was like the ES was actually up, I don't know, 7, 8, 9 handles. Within 1 hour, we hit a volume of 200,000 already. And, my tweet comment was, something to the effect of, one day off and the market's impatient. We already have 200,000 in volume as of 7 o'clock. We'll see what the volume is in a second here. But I was shocked to see that so early on a Tuesday morning. Well, it will be Monday night. So let's kind of move it. Let's move through the stock index futures a little bit quicker here. I didn't adjust my inside fib. Here's the Nasdaq, Tom. This is looking pretty similar, right?
Very similar with the current uptrend, a little bit down today, although more of a flat, I think, base a little bit. I don't think it's broken out of a channel that the downtrend as much as the E-mini has, but similar dynamics going on, right? People are moving into equities. It looks like I'm targeting that moving average that you see up. That's right now around that 50% retracement of the inside. It might line up as a target or area of resistance.
This was the death cross I put up there for fun right before the death cross became an actual death cross. And it's a 5150. I just thought that was kind of interesting to see the dynamics of that. And actually, maybe it will become important. Right now, just looking at it, it does not look like the death cross is actually converging at all. It looks like it's still kind of diverging. So we'll keep an eye on that. Russell 2000. This is actually looking pretty similar also, isn't it?
Yeah, it's same dynamics. Again, a little bit, breakout of that trend channel, heading for those retracement levels, the 50%, the 38 on the outside fib. We may see resistance around there. Also going back to the left side of your chart, what is that? I think that's in April or March. You see that area that you've identified as support. That's right around that 50%, 38% resistance. Again, your idea of support becoming resistance could hold true 3 months later, 2 months later.
That's right. That's right. That's right. So we'll keep an eye on that. And that's tracking around 1923. So not too far from that. We're right between that 38 and 50 retracement level. Dow Jones right now. And again, there we go. We got a V-shaped recovery here. We got that doji staring at us like a sore thumb. And then buyers are coming back in pretty nicely here. So I'm open-minded in the Dow. I don't know how you feel about it.
Yeah, it's a little more pronounced, I think, than the last, the previous two indices we looked at. Look at the retracement. We're above 50 on the, what is that, outside fib on the right. We're targeting the 61% retracement. So, it's a little bit more advanced, I would say, than the other index futures. Doesn't mean that it's going to get anywhere, get to a reversal sooner. They'll probably all reverse around the same time, but I think it's just a little more advanced than the others in its charge upward.
All right, let's shoot over. I'm going to frog leap over to crude oil here, because we have some real news in crude oil here. We're rallying now, 118. We're getting close to these triple high wicks up here that we're tracking back in March 7th, 8th, and 9th. These really crazy highs. We're getting there as well right now. So a couple of things happen. The EU commits to a partial Russian crude ban, right? But really what they were talking about is an embargo would include an exemption for oil delivered from pipelines. So this is, anything that's not delivered from a pipeline, we're not going to take. If it's delivered from a pipeline, we are. And that part of that has to do with Hungary being landlocked, right? Hungary doesn't have a port. So that was one of the concessions that happened. However, it was, we're talking, a big chunk here of a big commitment on part of the EU. Should this thing actually, I don't know what their process is for formalizing this or legalizing this or implementing this, but that's going to cause a lot of pressure, a lot of upward pressure on crude oil futures. And, we talked about it last week with Bobby. I'm going to bring it up with Jimmy tomorrow, but again, I'm bullish here, Tom. Pretty strong. I'm tracking. We're going to see over 120 again.
Yeah, I agree. I mean, I think you can't get in front of this and say I'm going to be contrarian. The news last week from the Saudi foreign minister, and then now with this, what's happening to Germany? Germany gets a lot of their energy from Russia, and now they're going to embargo what it looks like about 2/3 of the exports from Russia. Where is the supply going to come to bring this price down? I just don't see it.
Correct. I agree with you 100%. And let's just stick with the energy complex while we're at it, because nat gas is actually having a little bit of a sell-off, which I'm surprised. I have a whole bunch of notes here from earlier this morning. I got these notes from John Kemp. He's a energy analyst over at Reuters, and he has a nice newsletter, by the way. You can follow him at J Kemp Energy on Twitter. But he's got some really good stats he uses. He kind of has a good ability to kind of take stats from the EIA and other sources and makes charts and makes sense of really what's going on here. And basically all these bullet points, we're running out of time, so I'm not going to read every single one of them. All of these bullet points pretty much are suggesting, hey, we should see even higher nat gas prices going forward, given what's going on with the weather, given what's going on with storage, given what's going on with distribution, LNG to Europe, all of these type of things. Again, the drought in the West is going to have an impact as well. In addition to wheat prices are going to get whacked again, I think, in my humble opinion, although I'm not a commodity expert. In any event, though, we do have a little bit of selling. We have a kind of a double top here, Tom, from 25th and 26th.
Yeah, I think we're looking at the previous highs that we saw back in what looks like earlier in the year, early May. And, there's no reason we can't take those out again. We took them out, those double highs that you saw. We could get back up there. This just could be a temporary respite. If we're thinking that other, crude is going to be scarcer, we're going to start using more LNG, production goes up, but then, longer term, you have all those factors that say that, this should take off too. This just might be a pullback and then a resumption of trend. So I don't see why we can't take out those highs.
Yeah, I hear you. I hear you. And then just leapfrog. I have Rob Roy. I have gas futures up here as well. This is ugly. When I was driving home from mom and dad Cags's house yesterday, I pulled over to a gas station, and it was one of the bigger ones, one of the bigger chain ones. I don't remember what it was. There was lines everywhere. We got to the pump, and so I'm one of those guys, and you can make fun of me if you want, but I put premium in my car instead of regular unleaded. So of course that didn't work. The credit card thing went through. I tried to put it in, it didn't work. Then I tried to do the other super premium, didn't work. And at that point, I thought either I'm doing something wrong or the pump's broken. So I drove around to another pump, did the same thing, same process. The whole system froze. I had to go back inside and wait for about 30 people to actually buy peanuts and whatnot. And I got to the front, and she said, "Hey, we only have regular today. We're all week. We've only had regular. We cannot get the premium stuff." And I thought, oh, aha, that's interesting. And so I started doing a little bit of research about what it takes to actually make it. And it is, you get to the refinery, and then you go through a distillery process, and you adjust all the different temperature settings on your distillation column to come up with the distillate. And, there's still, this focus is really on diesel, and it's not so much on regular gasoline, because there's better profit margin there for the distillers. So they're making that. And then as gasoline being an afterthought, all the extra octane additives they're just not, bothering with, right? So you have this phenomenon going on. I didn't get it at first, but now I was like, okay, it's all coming together now as gas prices really are making really crazy highs. And again, I don't think this is going to stop soon.
Yeah, I mean, look, this is reflective of the, what we've seen is the issue isn't necessarily with just putting crude into the market, gasoline, refining it, getting out gasoline, right? It's the distillation process that seems like there's issues. It's the part of the process that's kind of gumming up the work, so to speak. Not as efficient, not as maybe not as open, maybe not enough refineries are open, and they're down for maintenance. During COVID, did they get maintained? Who knows? These are the things that we're dealing with now, and you actually saw it real time, right? You lived it.
Yeah, it was. Yeah, it took me a while to put the pieces together, but we're good there. And by the way, so we have our producer is a very kind individual. His name is Jason, and he slipped a note here on the side saying, "We can skip the commercial." he noticed that it's already 9:27. Let's go to, we're going to skip the commercial. We're going to cruise over to the Eurofx really quickly, and then we'll get into the 10-minute charts here at the open. Euro did kind of make a really nice time. I'm really impressed with this chart. This is like textbook kind of behavior almost, where we had a long-term kind of bear market here with a little bit of, sideways moogie-foogie here in March. And then we hit the bottom, and we kind of retrace all the way back up here. And we're literally between 23.6 and 38.2 right now. And I'm wondering if the retracement is over right now in the year with the Eurofx. We had a lot of chatter this morning talking about from the ECB folks on interest rates.
Right. And looking at the chart, we've got that 50, I believe it's a 50-day exponential moving average. We haven't really been able to close above it. That could be acting as resistance. This retracement, we do still have somewhat higher lows and higher highs. So, we're getting at an interesting point where we're either going to continue the trend, break that 50, or does the 50 hold and we break out of that upward channel back either sideways or to the downside. The MACD is still strong. That MACD difference is still strong, but it could be petering out, right? And you see that it's kind of flattened out. It's found a plateau, so to speak. If we see that turn down, that might be starting to indicate that trend is wavering. Very, very, very awesome. I agree. All right, so let's shoot over to British pound. This is the last one before we're going to go over to the 10. Well, actually, I'm going to show the Bitcoin really fast. So we did get stopped out in our long-term Bitcoin trade. So I'm just going to be really quick. British pound's looking the same, just structurally, MACD all the way through. On the actual dollar index, again, it's kind of at that 50% retracement level. Tom, you had some comments on the dollar index, right? Right. It's basically the reverse of the Eurofx, right? So we saw Eurofx, we just saw resistance at the 50 50 period moving average. Here we're finding support at the 50-day exponential moving average, right down to the 50% retracement from that long move starting in April. So we might find support there, two levels that are interesting for support. And today, just kind of came off of that 50-day moving average. It's a bullish day. We'll see if that holds. But again, the interesting thing here is it's a little more pronounced out of this downward trend, this breakout. So one candle does not a breakout make. We'll see what happens going into the week.
And real quick, what do you make of the RSI down here?
RSI is kind of reflective of the price. I don't see anything really that interesting. The turn up follows the price. We're at the middle. We're kind of 46-ish, 50. I'm still. It's interesting, but it isn't giving me any insight that the price isn't giving me.
Gotcha. All right, that's good. And real quickly, Bitcoin, we did get stopped out. Remember, I really wanted to approach this target wick down here. Didn't happen. Not only did this channel hold, but then we had a big rally on Bitcoin today for some unknown reason, up to 31,770. So that's pretty much where our stop was. I think it was at 31,775. So again, we got stopped out at the high, but that's okay. We're going to keep, I think I'll double check the numbers there in a second. We'll go back to that Bitcoin as well. We are open now, everybody. We are rocking and rolling, and we're going to shoot over to, I want to show, sorry about that. I want to show one thing before we kind of really focus on these 10-minute charts. We're a couple minutes into the open right now, and I'll just open up this S&P. I'm still tracking the super trend here. I got the MES going. I got the micro E-mini S&P super trend up, and we had a signal here. We had a signal here this morning at about 820 to 810 bar, right? And if you would have taken it, you would have, this dotted line here, if you were strict to the rules where you're stopped, you would have been stopped out. If you weren't strict to the rules, then maybe you weren't, but literally that's almost a 20 handle move up to down. So it would have been tough not to be. And anyway, in any event, it's still red, but it's really not valid, I don't think, anymore, since we got technically stopped out on the super trend. I'm not sure exactly how it works, but we're going to keep tracking it going forward here. It looks like we have some sellers coming in. Go ahead. I'm sorry,
Jim. Just real quick on the super trend. If you could just bring that up, just note that the candles colors here are not typical candles, right? So the green and the red indicate the trend that the super trend is telling us. And the dark candle versus the light candle is bearish. The dark candles are bearish in traditional terms of candles, and the light candles are bullish. So it's slightly different from our traditional candles of green and red. It's important to know, because I might look at this and say, why is that green candle look like it's going in a downtrend, right? We just have to be careful when we interpret that.
Yeah, good point. Good point. Let's get this out of the way right now. All right. So you can see here in my realized P&L, remember trading in real-time sim, this was where we got stopped out on that, on our trade, on our long-term. Took 3 days to happen. That was the Bitcoin, and we can kind of take a peek at that again. We're literally not even 5 minutes into a time, and sellers are pretty dominant right now.
Right. The bounce off of, what does it look like? Well, actually not bounce off of, but the opening bar just took out the recent uptrend that we saw. We're trading. It's been nice trading around the pivots. We started up at the pivot point, traded up to the pivot point, came down to S1, found support. Now we're trading around S2. Can we find S3? And that's pretty far away, but again, never say never.
Nothing's too far away in these markets, man. Especially ever since Thanksgiving, nothing surprises me. Let's just kind of roll through the other stock index futures really quick to see if we're seeing a similar behavior or something a little bit. So far, S2 is holding in the micro Nasdaq.
Yeah, exactly. And again, first candle of the day, taking out the last half hour training to resume the trend that we saw since just about, I don't know, an hour and a half, 2 hours ago. But yeah, I think S1 seemed to be hold pretty well as resistance. We traded up to it in the current candle. Let's target S2. Why not?
Yeah, and just to kind of graphically show what you're talking about, we had this trend start at 840. We went all the way up to the previous candle here, 920 to 930 right before the open. So that was a trend up. This opening candle right now took that whole thing out. In other words, we're trading below the low of that wick, which is approximately 594, give or take. So, and we're approaching S2 as well. So when Tom says it took out the trend, that's what he means.
Yep.
YM S3, baby. Here we go. Next step, S3. It's very interesting how these S2s and S3s are a little bit different between stock index futures, yet we're approaching each one respectively.
Yeah, and I think it's reflective of somewhat of Friday's activity, right? So where was the activity? Which index was trading and gave a lot more volatility? So what this tells me is if YM's trading towards S3, all the indices are down on this candle, but YM's hitting S3, it just means that Friday wasn't as volatile in the Dow futures than it was for the other index futures.
Well, and I'm wondering, Tom, if these pivots aren't reflecting yesterday's little mini session that we had. Remember we were open a little bit for a few hours. I think Sunday night to Monday morning, possibly, because they don't like to be closed all the time. So I got to double check that, but I think that's probably we got to keep that in mind also.
Oh, that could be. That very well could be.
Yeah. Let's kind of move over here to RT. Russell's looking a little better from an S2 point of view. we're right at it right now. Again, this first 10-minute candle could surprise you, man. We could have a big down candle, and then the next one could be a big up candle. Anything could happen these first 10 minutes. The volume is off the hook. Look at the E-mini S&P, 563,000 already. We're about 200,000 over a normal big day, 300,000 over just a normal blah, blah day. So there's some volume coming into these markets for sure.
And what's interesting is on the Russell, we haven't taken out that trend from a half hour ago, right? So the low of the current wick didn't take out the trading that we saw into the open. So, maybe structurally, Russell, there's more interest in this index, more bullish interest in this index, I should say, than let's say the S&P.
Good catch. Good catch. By the way, we got some friendly faces here today. John Amos, Griffin, Nathan, M.A., Tim Marco, David Lewis, Con, good to see you. Thank you for being here. I'm not going to try to pronounce the whole name properly with my English is bad enough, so we'll just keep it at that, but thank you for coming. Robert Cole, It Is Next, Reno Jim, among others. Thanks, guys, for coming here. Greatly appreciate everybody being here and participating and helping out. Let's kind of keep on moving here and just really quickly just hit some of the main ones. I got gold futures right here. I took off the mini gold. We've got the big gold up right now. CCI is pretty positive. Moving average cross is going north right now. And we're, couldn't quite we're at the pivot now, but we couldn't break through here as well. Again, I'm going to wait for this 10-minute bar before I express too much of an opinion, but I am going to draw a fib line at this point.
And I think what's interesting to see is we've been pretty range bound between the pivot and S1, roughly. I shouldn't say exactly, right? Because we did see trading above the pivot and below S1, but it looks like a majority of the trading is happening between those two levels. It might be an interesting, two interesting areas that we might use in our decisions to trade.
Yeah, no, for sure. And, you can make a case for, hey, I want to sell off the pivot. I want to buy off the S1, and that's kind of an extended value area trade idea, right? So with a regular value area trade, you're just trading between the top of the value area and the bottom of the value area. Here, it's like a little extended, but if you think about it, it's kind of a nice window or frame around market price. Yeah, we had this big crazy wick way down here. We have potentially a big wick up here right now, depending on what happens in the next minute and 15 seconds here as well. So that's a great point as well. We might come back to gold here in a second. Crude oil, again, I'm looking for places to buy. I don't care what the chart's telling me. I mean, it's been pretty positive for sure.
Yeah, I mean, if you're looking to buy, you might look at R2. It's right around the VWAP currently, and as it trades above that, VWAP will move up. And that would be a little bit aggressive, I think. You might, or I should say a little more conservative, a little more aggressive might be to take it down to the lows from around 730-ish. R1 would be really also another target, but we haven't traded there since last night. So it might be a little bit too much to get to. looks like so far we're fairly range bound between 119 and 118. Not too big of a wide range. So, you know, are we going to break out? A lot of times these markets trade sideways, and then when it moves outside of the range, it could continue. We saw that with Bitcoin, the Bitcoin chart that Jim showed earlier. So is that going to happen here in crude? Our bias is still pretty bullish. So to get back down to a level, 38% retracement, R2, 50% retracement on the Fibonacci, those are all viable.
Yeah. So Tom, I really like the point of here's what everything's converging in my life right now. We have the point of control. We have the VWAP. We have the R2 right between 38 and 50. I love that. And again, I'm a little more aggressive. I wouldn't be as aggressive as 38. So we're going to throw in, this is a big crude, not a micro. So we're going to throw it in. And then from a stop loss point of view, yeah, you got to respect these big wicks, but like you said, we haven't traded below here in a long period of time, 118.22. So my stop, and it's right up against that 61.8. So that's going to be my initial stop loss for this trade idea. And everybody knows my target is right there, top of that wick up here. So we'll be patient. We'll let that one go. First trade idea of the day. And we'll squish this up here. We do have another 10-minute candle though. So I want to go back to the ES and see what we have, what we're looking at here.
Continuation selling, right? Let's see if we can get to that S3 down at the bottom. Just to remind everybody, these levels S1, 2, 3 are around the pivot. They're underneath the pivot. Pivot point is the gold level way up at the top, but this is all based on the previous day's trading. So these are levels that don't change during the course of the day, and we can use these as guidance.
Yeah, for sure. And the other thing that I noticed is the stock index futures across the board, we're all pretty negative, right? Especially the DAX, even the Euro stocks down 61. Again, this is probably reflective. Some of this is reflective of what's going on with, we're not going to take Russian oil, at least 2/3 of it, unless it's, it comes to us by pipe. And if you go down to treasuries, they're also down, right? So these things are going in the same direction instead of opposite directions. In other words, they're correlated instead of positively correlated instead of negatively correlated, which is interesting because we have seen in the past money flowing back and forth between asset classes. And now it seems like these two are both down in a negative way.
Yeah, I would say that gold is kind of behaving how we would expect if you think about flight to quality, or as the market is trending down in the equities, let's move into gold. Actually is starting to behave that way. It looks like just today. Bitcoin as well, flight to safety, flight to quality, whatever you want to call it. Bitcoin made that big move up. This could be something where those equity traders, equity investors are moving into other assets.
Yeah, that's one way to look at it. Another way I was thinking about it this weekend with the Bitcoin is, this could be a delayed reaction, right? So everybody, might not be looking at the futures market like I do before I go to bed. And the thought was, hey, last week was a big day up. There should be a positive correlation between Bitcoin and Nasdaq and everybody else. Therefore, I'm going to get in and start buying it again. And so, and it could be a delayed effect. I don't know for sure, but that's what I was kind of scratching my head thinking about as I pondered going to sleep last night. Clayton says, why are my pivots different than yours? I have NinjaTrader 8. I'm looking at MES 6 point. Let's go to MES. So you have the June contract, right? So you have 6/22 on your screen. Is that correct, Clayton? These are what they should be. Here's that pivot is up here. Pivot is 78. S1 is 54.25, give or take. And then S2 is down here at 41.33. I haven't changed any of the settings. I just did the out of the box, added the daily pivot to here. And make sure you're doing the daily pivot. Let me just show you real quick. Well, we got some time here. I'll just go to indicators really quickly. And I have pivots. It's actually called daily pivots on here, I think. Or something like that. You'll find it on here. And then it's just right here out of the box with this 20 calculated intraday data. Didn't change anything on each tick. Doesn't matter because it's based on previous day's data. So it should be all good. Make sure you have P1, R1, R2, R3 all color coded. You're not skipping one. That's another common thing that I used to mess up. But it should be straight out of the box. If not, just hit that help button, shoot out an email to email support. They're super fast, right? If you do it from here, they know who you are, what your account is, and all that stuff. They'll be able to help you. Whew. So continue. So here we have 4 more minutes left, Tom. It looks like this in the S&P anyway. We're trying to fight back a little bit here.
Yeah, and this is we'll see what happens, how it ends. I like to see that reversal pattern where you have a big long candle going down and then a doji, right? And it just says that buyers are coming in to push this price back up. Doji can be the same price where it entered, or it could be a small body. Of course, if we see a bullish candle, we'll know right away. But sometimes we'll see that it takes a little bit for the buyers to come back in and hammer that price up before it takes off again. Again, a little bit of continuation selling, but buyers coming in to push it back up. I like to see that if we're bullish overall.
Yeah, for sure. I'm intrigued right now. I really am, but I want a little bit more data here. I want 4 more minutes to go by before I get too overly exuberant or whatever Bernanke's phrase was, or whoever that was. Right now.
Oh, man.
So we'll see though. Bottom of the value area, there's no prices below value. That worries me. There's no prices below value. The volume profile is really, really rough. Really rough. We have 1, 2, 3, 4 different clusters of high volume areas right now. A lot of that should fill in though. So if you're looking to go long here, that's in your favor, right? What's in your favor is a lot of this stuff should fill in. It might not. I'm just talking about a textbook scenario. But what's against you is we really don't have any prices below value right now. And S3 is sitting there like a beacon, like a lighthouse in Nantucket, keeping the boats off the rocky shores. That's what it's doing for me, Tom.
Yeah, I think if we can't keep this buying pressure up, I think S3 or S2 is in line for sure.
All right, so we're here. We're in the game here in crude oil. We got the big crude oil contract up, so we got to be really careful here. So a couple ideas, a couple things to think about. How committed are you to this? How long do you want to be in this trade? All of these things factor into your trade decision. We don't have that much time together, so this target up here is pretty far away. I don't expect this target to get hit in the next 45 minutes or however long we have together. Top of the value over here, 23.6%, in my mind, is more of a reasonable target. And there's a lot of meat on this bone because this is a classic, not a micro. So I'm going to throw my order in there. We're going to kind of examine where our stop is in relationship to that order. So we pretty much have parity right now on both sides. I'm going to be patient for the next candle before I start trailing my stop up. Because remember, a lot of times we trail our stop up and then bad things happen to us because we were impatient. I want to be patient. I'm not going to let FOMO affect this, right? Because I think we're in a good spot here. There's a lot of support down between where we're trading right now and where our stop is. And there's a lot of price action where our target is. So I'm kind of liking this right now, and so far so good, but we'll see how it goes. And remember, this is a big contract. Each tick is worth $10. So don't get, so just be careful with that. Micros, they're 1/10 the size smaller. So if that's more appropriate for your account and your leverage risk tolerance, then do that, because micros are moving the same way, exact same way.
Yeah, and with micros, you have more room to pull that stop down and give the trade room to breathe and hit your target, because your targets fundamentally, or I should say fundamentally and technically, are legit, right? There's a really good reason to use 119.25 as a target. We just need time sometimes. And so the micros give you a little bit more room for that trade to breathe.
Yeah, as a matter of fact, so from a micro point of view, I'd be like, all right, let's get a second unit down here at R1. And then we could really put our stop, almost to the bottom of the day here, almost to the lows. So we'd have 2 units here. We'd have one if we got that far. So that's how my thinking's changed when I'm looking at a bigger contract. I mean, 22 ticks doesn't seem like anything in these markets, but at $10 pop, they are. So you got to be careful there from a risk point of view, and take your time and be patient. let's shoot over. Remember, we were talking about Russell being a little stronger. Let's see what's going on with the Russell right now.
Yeah, I mean, I look at the Russell and I say, okay, it didn't take out that move initially, but it sure did at the end, and now it looks even a little bit weaker than the E-mini. So it does have a ways to go to hit the next pivot level at S3, but as long as when we compare it to the E-mini that we were just looking at, which was fighting to be a bullish candle, and now we finished the candle, this looks like continuation selling on the Russell. So maybe a little weaker, maybe a better chance to hit that S3 than the E-mini hitting its next pivot. We'll see.
Very interesting. Very, very interesting. Yeah, the CCI is getting hammered, minus 238, trying to arc up, but not really making any progress. And then the moving average cross, of course, is at the bottom here. So the fast moving average cross, EMA, is actually diverging from the slow right now. And I'm just eyeballing it right now. We're about 5 handles apart, give or take, as I stare at it. Oh, Griffin, I've got a couple of messages here. Flat, short 14. Oh my gosh. So Griffin's short. He likes the short position. I hear you. Here it says nice MNC short at 38% retracement. Maybe MNQ. Oh, MNC. MNC. Which? Oh, MNQ. There you go. Let's shoot over to MNQ. Let's throw a retracement in here and see if we can follow your logic. It's going to be good logic, I am sure. Let's do it. High to low. Retracement. I'm going high to low. Oops, I missed it. I'll fix it. Remember, I added that 76.4 to give this symmetry. It's the equivalent to 23.6 on the downside. You could yell at me for it not being a real fib number. I don't care. It might be. I didn't calculate the golden ratio that far out, but it gives me symmetry on this. So it doesn't matter if I go high to low or low to high. Each one of these is an area of interest for me as well. 38.2 is up here. I kind of agree that might be a good short, actually. We'll see, when we get there. It looks like it's far away, but it's not. There's a nice distribution node right there, a lot of price happiness right there, and then also a lot of price happiness right above it. So clear and present place to put a stop if you're going short, in my opinion. And that's kind of that's as important as where you want to enter. It's like, is there a clear and present place for a stop? And there is right there with my rectangle. So great observation. Appreciate that. Hans, short MNQ from S2. All right. So he's in it. Hans is in the thick of things right now because we are just south of S2 and moving.
Yeah. And that concept of breaking support, right? Why wouldn't we say, you know what, I'm going to go long at S2, and that's viable. But the other thought is, if we break S2, where are we going to go next? And S3 is a target, right? So if support doesn't hold, then it could become resistance, and we could track our way. If you're bearish on the day, boy, if we break that support, let's take that ride down. And that's what Hans did.
Yeah, no, for sure. And I'm with you on that. We're with you on that, Hans. I like that. I like this right now. I would not be looking for anywhere to buy right now. I mean, this is not a buying opportunity. We haven't established an area of what I'm going to call support yet. So we're going to try to buy the lows randomly as this goes down. And that's usually a recipe for badness. I mean, every once in a while, a blind squirrel gets an acorn, but usually not. So you got to be real careful there. Let's shoot back over to ES again. I want to see 2 or 3 candles here where we could say, okay, finally we have buyers coming in. Finally, we have buyers coming in, but it's not. We're not. It's a little baby candle in relationship to the dominant candle. This is a dominant candle at 930 to 940. I mean, until it's a dominant till it's not, and it is dominant right now. So again, not looking for any places to buy, looking for places to sell, and I could even throw a trade idea in here for now. CCI is arcing its way back up, but not convincingly. We're still negative 173 on the CCI, which is pretty tough. But got yesterday's point of control and that 23.6 right there. You have S2 right here. So from a 2-unit kind of trade idea, there's a couple of really nice targets right there. And I would go ahead and even consider that as a trade idea today, right? It would look something like this. 23%. Again, I'm in a micro here, so I could do this, right? I feel confident in doing this. And look at 38, S2, point of control, VWAP, all of it's converging right then and there. And I'd be more conservative. I'd wait for the point of control, throw a second unit in, and then, let's make a rectangle. And the rectangle is going to incorporate the S1 right now for my stop area, right? And I'm going to go throw it in here. Really easy. We haven't traded up in that rectangle since, well, I don't know. The alarm went off when we traded here. My alarm clock next to my bed. I should have known this is why. So I'm going to be above S1 right by yesterday's lows for the stop loss. And we can do this because it's a micro, right? We have a lot of room. By the way, let's just take a peek, Tom, real quick. We'll just kind of leave it there and see how it goes. Let's take a peek real quick. I know we got 5 more minutes left before 10 o'clock at the gold. Is it gold? What are we at here? We're in crude oil. Crude oil. All right. So we're still kind of pretty much where we entered, give or take a few ticks. Point of control. This is really a blocky kind of scenario, right? We're happy between 65 and 85. That's 20 ticks. That's a lot of volatility. That's a lot of bouncing around up here as this point of control is trying to establish itself. Gold right now, 125,000 contracts. That's a pretty decent day. Oh, wait a second. I'm sorry. What am I talking about? Crude oil. Sorry, crude oil, 226,000. That's a really good day in crude oil also. So we're getting some volume there in crude oil. I get gold and crude oil entangled in my mind, Tom, for some reason.
Yeah, let's take a look at gold. I want to look at that chart because we said that gold had a little bit of a range going on. And I just want to see, okay, so we almost got up to that pivot, right? We're coming back down. We made a new candle. What do we've got 3 minutes left, a little less than 4 minutes left. Yeah, just still kind of range bound here. Didn't quite get the pivot. Haven't gotten the S1 yet. Yeah, there's nothing I'm doing here right now, but just kind of wait and see where does it get to next, and then that's where I might put something in.
Okay, all right, very interesting. Yeah, so we have this kind of the shelf right here, the previous two candles, right, where we opened and closed. Sellers turned around right away on this previous candle here at 1857.1, a lower high, another lower high. We're about to make our first lower low, maybe, if we could approach that VWAP at 50% here. So yeah, it's there's a lot of stuff to process here on this chart. Moving average cross is starting to go sideways. CCI is arcing down toward the zero line. A lot of stuff to process right here. The other thing that's interesting to me, Tom, is this divot here. We don't talk about this enough. We have volume up here. We have volume down here. And then we have this, I'm going to call it a divot. I'm sure there's a better word than divot, Tom, that you could come up with, but I'm calling it that around 1853.
Right. And the thought is, do we fill that area? And, where we're trading right now, it looks like we could, as we trade down into that price area, that divot should fill and maybe make a nice distribution. Because that point of control isn't quite in the middle of that distribution, but it's close enough if we were to fill that divot. So we might see some trading down there.
Yeah, no, for sure. The only thing that worries me here is, in an ideal world, it's like, all right, let's wait to try to get below this 50%, 38%, maybe even go all the way down to 38.2%, and then try to go long or even way lower. If these are just nonstop red bars, red candles, then I'm going to get worried that there's going to be a longer term trend that kicks us all the way back down to our target width way down here.
Right. That's it. Exactly. Right. Once we hit our target of where we think the market's going to go, what happens then? Does it reflect or does it continue? And, just because it's been range bound the whole day between S1 and pivot, the pivot point doesn't mean that that's going to continue. Right. So, good to look at the CCI, good to look at the moving averages to see what they're telling us too.
Going back to Hans, Hans pretty much says price broke S2 and retest it. That's why I went short. Okay, so what Hans is saying is, and this is a great comment. So we broke the S2 2 candles ago, right? And then the very next candle, the previous closed candle, we retested it. We tried to get back up over it. We couldn't, and we continued that downward pressure. And that's what gave them affirmation or an extra level of extra sense that this might be a good trade. So I like that thought process for sure. And that it was a retest. You are absolutely right. Carlos says, trend followers make money in trending markets. Momentum traders profit when short market moves continue into the next period. But once the market shifts, it leaves us traders with our risk bias. Yeah, I hear you. Well, I would say, all right, you're using the word risk bias, Carlos. I have this belief perseverance is what I call it, what I have. It's a problem. It's a problem with me. I have this, not only in trading, but in life. I have a belief perseverance that things should behave a certain way because, of course, I'm always right. Just ask Mrs. Kaggs. I'm always right. We know the reality of that. So I hear you. I hear what you're saying, though. It's a great comment. Then Carlos goes on to say, targeting 40.75, looking for a short later. 40.70. Okay. So you got high hopes here, just like that rubber tree plant, just like those ants. We'll see how this moves. This is the micro I'm showing right now. And you can see our crude oil trades kind of doing sideways here. You can see right up here the P&L moving. I got my eye on it. I'm not abandoning it, but we'll get at 10 o'clock. Oh, we are 10 o'clock time. We're at that 10 o'clock bar right now. Wow.
New candle, right? Looks like buyers are trying to push this back up, right? So looking at, we're in the micro E-mini right here, and we did get that, we took out the previous bar's high in the last bar, and so now we're trying to do that again. I think, this could be that the market's trying to claw back up to those 930 levels where we just saw that dominant candle take out the previous, 2 hours, 3 hours, 4 hours. I'm going to draw the opening range line right now. Right. The 30 minutes of. Right. So, the thought is with the opening range, first 30 minutes, high, low, let's mark it and see where we're trading in relation. Now, right now we're between the high and the low. So it's one of these things where if we break out on the low side, or we, rally to break out on the upside, we should see that we trade at that bias the rest of the day. Now that's, again, should, not will. And that's, pretty confident. The confidence level is high that it'll do it, but anything can happen, right? So if we break down on this low in the opening range, we should stay underneath that low towards the end of the trading day. Interesting. Well, we'll see. We'll see how it's just flirting right now. Point of controls, right there, right where we're at. So there's a lot of volume where we're trading right now. We got kind of a weird, this is the micro. So the volume profile is going to look a little different than the classic, but pretty much 1, 2, 3 different volume nodes here with volume accumulating pretty substantively right now around 41.14. R. Harris says, with your accents, it sounds like you're still on the golf course with divots. Tom, are you a golf guy? I don't even know. I'm not a golf guy. No, I'm not a golf guy. Yeah, I just find, 5 hours in a cart with the same knuckleheads, drinking beer in the heat, looking for lost balls. Not my cup of tea. If we're going to do that, let's just go sit at a proper bar. Right. Be a lot easier. Yeah. Totally agree. All right. So where are we at here? So that's it. So we're at lessons learned right now, guys. We're at already 10:03. Time flies. We're waiting for this trade to again, I'm going to wait for it. I'm going to hold it. Right now, nothing really is changing my mind. CCI is still minus 43. Moving average cross is still trending down, both the fast and the slow. I like this S2 level. I like the S3 level also. So I'm going to be patient here. Buyers aren't jumping on the bandwagon right now to get in here. And then for the other trade idea that we had in crude oil, notice I said crude oil instead of gold. So it's kind of now it's toggling against us here, right? Still in the value area, 50% retracement here. I think our stop is positioned well. I think our entry was good. I think our target's good. So again, from a lessons learned point of view, I think this is a good trade idea. Anything could happen. Obviously, it could be a winner, it could be a loser. Who knows? But right now, obviously, I wouldn't trail the stop. I'd be patient. I wouldn't worry about the red P&L, and just take our time on this thing and see how it goes forward here. We didn't even get a chance to talk. Bonds are down big. This is a huge number, by the way, Tom. Before we shoot over to anything else, I want to just look at that. 2 handles is that's $2,000 per contract, guys, when you talk about it. A 39 handle right now
Do I have that right? ZB9. Yeah, we're in September in bonds, by the way. Remember, September bonds. This is where we're at right now for the front month in all the treasuries, by the way, all the treasuries. And wow, what a day! Look at that benchmark candle here, 820 to 830. That's usually when the bonds quote unquote open, right? 7:20 Central Time, 8:20. There's not an official open, but that's kind of the unofficial open. And you see serious selling coming in right now. So again, I'd be looking for places to sell, even around the S2. S3 is pretty far away, but it's still doable right here in 30-year Treasury bonds. And just from a Fibonacci point of view, let me just add that. From high to low, you can't really see it from the chart, Tom, but this is a big range today. Minus two handles, 2.00. Remember, each is traded in 30 seconds. So that's 64 ticks high to low is a big move down.
Yeah. And the fact that it tried to rally after the bond market opened and couldn't quite get back to where it was when the bond market opened, I think that's just sign of weakness. It did find that point of control area. The point of control was most likely established earlier in the day. All that congestion from last night to early in the morning. And so when we came back up to point of control, about a half hour ago, right? And it just couldn't sustain. So not looking very bullish for the bonds.
Yeah. And another thing that I noticed here about this chart, you have these event horizons between the value area and prices below value, that dotted line there. And you have, again, at the top, top of the value area and prices above value. Number one, we have a lot of volume down, prices below value. Number two, a lot of times you could do the opposite with this point of control. You could say, hey, or with the bottom of the value area and say, hey, if the market retests it back up here, this is where I want to get short. So this is another area of interest for me, the 23.6, the S2, and the trade would look something kind of like this. Let's wait for us to get back up, somewhere here, whether you want to be exactly at the 23.6 in S1 or you want to be at the top of the value area. It's kind of user discretion here. You're within one tick or so, and then say, all right, we get back up to S1. I made a mistake, a big mistake, but that would be another trade idea in my book right here. I'll throw it in. We'll see how it goes. We'll be patient, see how it goes. All right, covered a lot of ground, Tom.
Do you want to look at the micro Bitcoin real quick on the intraday?
Yeah, let's do it. I got tuned right now. Yeah.
Yeah. So what's interesting, I was looking at this chart earlier on an intraday basis, and I pulled the chart back to see where we were, and I couldn't find anything. Right? If you pull the chart over,
yeah,
where's the data? Right? Well, we have study data. You just might have to compress the chart, because it did make such a big move, and there's the data. So just if you're wondering, if you're looking at a chart and you see trying to find older data and it's not there, sometimes it's just a matter of getting that data on the scale because of such a big move. You'll notice right now it's trading at R1. It traded all the way down to R1, finding support there. So R1 just being above the pivot. So the pivot is well below where we are now. It might try to get back there, but based on the big move over the weekend. And remember, Bitcoin is the underlying, the actual coin is trading all the time. These are the Bitcoin futures, which are trading exchange hours. So, you do see gaps like this just because it is the underlying is trading. I think it's like 24/6 or 24/7 even. But the futures itself are trading shorter hours, right? So we started trading last night. We found R1 today. We'll see where it goes.
Yeah, and if you're a gap guy or girl, this is it. I mean, this is where the gap is. Do gaps always get filled or not? And it would be, according to the previous sessions, top of the value area. And this is a big distance here. But again, if you're thinking about gaps, you're thinking about going short R1 or something like that, there's a really nice target. If you believe in this prophecy that gaps always get filled.
Right.
But Tom's
Right.
got a good point. There is underlying Bitcoin trading during the weekend, which is kind of odd to me, but it happens. So that's going to explain the gap for sure. And interestingly enough, our stop on that long-term trade, and look how much volume traded there, Tom. It was not only did it hit my stop, I don't feel bad.
Other people saw your stop too, right?
A lot of people apparently, they're like, all right, look at this idiot. Here he is. Let's take him out. And I said, wait, are you sure? Yeah, let's do it. And well, let's be double sure. In any event, that was very interesting. But that kind of talks about levels, right? We identify levels of, hey, we're wrong here, right? Or we're right here. And we're not the ones thinking about that price.
Right. And what's interesting, it wasn't an even number, right? It didn't end in 0-0.
No.
I believe. I think they were 775 and on the lower
side.
It's
35. I have it at 735.
735. So, it's again not just picking a random, let's look at 31,800 or 32,000, right? It's a very specific level, but other people were seeing it too, and a lot of trading there.
Yeah, for sure. All right, let's take a look at what the futures hold. I'm going to pull up 10:10. We're running out of time here. Time flies when we're having fun. This is the Econo Day calendar. Isabella, if you can cut and paste that into in for the gang, someone might want to just bookmark this. I use it for looking at what are the U.S. economic releases coming out. Right, this is planned news, so we know these are coming out when the announcement says they're coming out. Right, they're usually government agencies, some private sector groups. Developing statistics that are widely followed by traders, and these are things you're planned, right? You know about. There's things you don't know about that are unplanned. Things happen all the time, but these are things we could prepare for. We had Case-Shiller, this morning, FHA, Chicago PMI, consumer confidence, Dallas Fed. You can go back and kind of see the numbers and how it really price action on an intraday chart, and then we have some routine Treasury functions. But tomorrow. We have PMI manufacturing. That's got a green dot, so it's kind of important. We have ISM manufacturing, has a red dot, so it's more important. And then construction spending, and then JOLTS, which is a job report. Williams is speaking, and Bullard is speaking. Bullard's been very vocal and loud lately. Williams is more laid back, but he runs the trading desk at the New York Fed and has a little bit more insight, I think, into some of the details and some of the numbers with respect to what's going on. Remember, they're tapering 50% taper now, and then 3 months they're going 100% taper. So they're going 60 million to 30 million, and then the 35 million to 17.5 million. I'm sorry, 17.5 million to 30 million on mortgage backs, 30 to 60 and on regular debt, and they're just going to let it expire off the books, right? These are just these securities that they hold will mature, and instead of replacing the maturity, they'll let it just expire and roll off the books up to that cap. So we'll see what they talk with what kind of report we get from John Williams tomorrow. It's going to be important.
Great. And Jim, I just want to remind everybody that some of the shows that we're having this week, other than the opening range and bars closing every day to bookend the day, we do have Traders Workshop today, and we will have Daniel Sinig to talk about volume, volatility, momentum, some of the fundamentals of technical analysis and how he uses them to indicate what's happening in the market. That's at noon today, noon Eastern time. And then tomorrow you're speaking with Jimmy, right? What are you speaking with Jimmy about on See the Futures?
I'm not sure, to be honest with you. I got to call, I may have my call with him in a little while. We're going to walk through the game plan for tomorrow. But it's going to be interesting for sure. I don't have my Cliff Notes up here to tell me the long-term schedule. So it's going to be fun. Jimmy's tomorrow. And then Thursday, we have also a pretty nice event coming up too with Anthony Crudelli, benefits of futures, right?
Right. We're going to be talking about using micro Nasdaq futures maybe instead of or in place of the actual Qs or the ETF for Nasdaq in your trading, and see why that could help you. So again, benefits of futures, and that's at 10:30 Thursday, 10:30 Eastern time. Tomorrow, See the Futures, 10:30 Eastern time with Jim and Jimmy. And again, today, noon, Traders Workshop.
Awesome. Yeah, it's going to be a lot of fun. I'm excited. And Isabella, by the way, if you could cut and paste the events page in just so people could see it, if you want to bookmark the YouTube, thanks for the thumbs up on the YouTube channel, by the way. You can subscribe and you will get email notices. Unless you don't want them, then don't subscribe. But it's easiest. That's what I do. It's easier for me to remember what's coming up when I'm interested in something. So feel free to do that. Isabella, thanks for doing that. Thanks for the thumbs up, guys, on YouTube. Greatly appreciate that. Thanks for being here. Thanks for the interaction in the chats. For sure. Remember, a lot of leverage, a lot of volatility, a lot of risk, a lot of reward. Slow your roll. Easy on the day trade margins. Trading on a live, real-time simulated live NinjaTrader trading platform today. I'm going to keep these trades up. I'll take a peek at them this afternoon at the bar's closing event, see how it worked out or it didn't work out. And then finally, we have the poll. Did you participate in the market yesterday? 52% of you said no. 20% says I may have opened up a chart or two, right? Just kind of being, well, I don't know if I want to admit to it or not. And then 26% said, of course. So we have 26 hardcore. It doesn't matter if it's a holiday. We're going to make some trades. That's awesome. Thanks for that, Jason. Great, good info. All right, Tom. Thanks for being here with me today. Greatly appreciate it.
Thank you. Yeah, thanks for having me. It was a lot of fun.
Yeah, for sure. For sure. We're going to do it again. And everybody, I'm going to leave you with this. As usual, please be safe out there. Be good to each other. Thank you for being here.